Hey, where are you guys from? Where is everybody? I want to know who's here. Where are you guys from? How did you find out about us? Are you in my program? Are you in Jeff's program? And again, Lance is going to be here. Gregory, Oakland, Dallas. Look at that. People from everywhere. People from Orlando, Phoenix. How's the weather by the way, in Miami, Jeff? Is it warm still, or is it cooling up a little bit?
It's rainy. It's rained like crazy. There was like massive flooding downtown and cold front's coming in, which by cold front, I mean, it's going to be like 60 degrees tomorrow. I'm pretty excited about that though.
Yeah, it's nice to get a little cold weather as well. I'm actually I'm taking advantage of this winter. I'm taking my daughter in February, first week of February, to Orlando to the Universal Studios. So.
Oh, Universal's awesome.
Yeah. That's about as far as I go. Hey, look at that. Rochelle, all of our programs. Judith is in Rogers and Jeff's program. That's what I want to hear.
Hi, Judith.
Yeah, and I'm going to tell you guys what's really great about Jeff's programs, and Lance's too. Lance is not here, but he'll jump in a few minutes. I just jumped in a little early today because I was sitting here and I was like, might as well talk to you guys instead of just sitting here and talking to myself. And I noticed Jeff was here too. So Chicago, oh man, don't even get me started in Chicago. We have several people who live very close to Chicago, and it's cold. And we have a couple of people in Canada too, and it's freezing there. Harry, you must be loving Palm Beach right now, right? Love it. I love Palm Beach. Great place. Very
Great
close
place.
to where Jeff lives.
I have a lot of friends up there, yeah.
Yeah, it's very, very nice. The only thing I wish I wish I could change about Miami is the traffic. That's the only thing. It's starting to get very, very trafficy. Nothing like LA, but but boy, oh boy, I love Florida. Just overall, Florida, you just can't go wrong. You know,
the freedom state, Roger.
It is the freedom state. It really is. I mean, no state taxes. I mean, what's not to love? You know, what's not to love? And the whole COVID situation. Sarah says, "Where am I?" I'm in Ponte Vedra Beach, Sarah. I'm right in Ponte Vedra Beach, which is the south of Jacksonville. So I'm kind of between St. Augustine and Jacksonville, if you will. Yeah, good. Sunny California have yours and Jeff's programs. Well, that's great. So what I was actually saying about Jeff's programs, and this is really cool. Our programs, although we all do short-term, stock trading, ETF trading, the cool thing about my programs and Jeff's programs, they are as different as they can get. They're very different. They're based on totally different principles. Oh, there's Lance. Lance is here too. Hey, Lance, how are you? There he is. And Lance as well. Like Lance, for example, a lot of the programs that Lance has, they're based on unusual volume activity. And Lance has to get like a really expensive scanner. And I know it's an expensive scanner because I've seen the bill for this thing. It's a very expensive scanner that connects us directly to the board to the CBOE and to the exchange, which is very, very cool. And it would be prohibitive for one person to have that if you're just trading for yourself. But because you're part of Lance's program, he gives you exposure to that. Jeff, on the other hand, he uses a Bloomberg terminal that gives him a lot of correlation and things that are very, very hard to come by other things. So my point is, we do similar. We're involved in a similar quest to find, hot stocks, but we do it in a very, very different way. So it's really great to get our analysis because it's going to come from a very different perspective. B, get our programs because it's going to give you that diversification. When my program may be doing nothing, Lance or Jeff's program may be skyrocketing, or I may have a short trade where Jeff has a long trade, and so forth. And short diversification is one of the few free lunches Wall Street will offer you folks. So take advantage of it. Yeah, I do have my crystal ball, but it's there in the corner. I'm just going to keep it here for now. Lance, how are you doing today? You're muted.
There we go.
Yeah.
I got on my sport coat and my hat because my hair is looking all crazy. But a good start to the day. I traded my favorite stock of 2021, Under Armour. I traded it the first trade of 2022, and the calls did very well this morning. So very happy. Great way to start off the year.
What was? Can you repeat? Sorry, I was reading something. Yeah, I love the hat too. By the way, what was this? What was the ticker symbol?
Under Armour, UAA.
Yes,
Yes.
Under Armour. I just totally I missed. I blanked out. Under Armour. Okay, very very nice stock. Love that stock. Good liquidity in the options too.
Yes, I do UAA. A lot of people ask me, what about UA? And the reason why I like UAA is penny wide options compared to UA, which are about nickel wide options. So
yeah, it's a different. One is what, C class, one is B class, if I'm correct. Yeah. Okay. There's a couple of stocks like Discovery and a couple of stocks that have that same type of thing. So Jeff, how are you doing today?
I'm well. I'm watching
Good.
I'm watching the wheels go round and round, as John Lennon once said.
Tell us what we all heard the Fed yesterday with his confirmation hearing, trying his hardest to be ambiguous. Wanted to get your take on the state of the market. Then we'll move on to you, Lance, and then I'll go last, and then we'll go from there.
I was watching the J Powell pump testimony yesterday incredulously. No one ever asks the most obvious layup question, which is, we have CPI, we have inflation at 7%, we have negative yields of 6 and change percent, we have unemployment rate under 4%. Why the hell are you buying bonds still? Why are you still buying bonds right now? And then they dance around the next question. It's like, oh, the housing market's really tight. Do you think that's part of the inflationary picture? And he's like, well, let me see. Yeah, maybe it could have something to do with it. The follow-up question is, of course it has something to do with it. Why the hell are you buying mortgage bonds every month? Why?
I thought that was the funniest. I thought that, and it seems like nobody in the audience wanted to really get into the hard question, but it's like the pink elephant.
In my next life, I need to be one of those ruling class people that never get questioned for anything and just sit there and blankly stare and just go, oh yeah, you might have a point. Like, what's her name? Elizabeth Warren was like, these greedy guys, they're charging too much for meat, and they just suddenly wanted to turn a profit and make a buck. I mean, come on. Sorry, that's my rant.
The grocery store CEOs who are making so much money, and the grocery store industry, they need to cut prices even though their profit margins are like the slimmest. Like, oh, great job, Elizabeth Warren.
Yeah, you saw that, right?
Yeah.
Oh my gosh.
It really is amazing. Let me ask you guys this, and again, let's start with Lance this time. Lance, what do you think about? And I've got an interesting opinion on this, but we've been seeing a lot of talk over the weekend. Especially, I get really nervous over the weekend because that's when people consume news and information, and we've been getting a lot of news on Omicron, and the news, in my opinion, has been just doing everything possible to scare the living hell out of people. But I looked over my mother-in-law was trying to scare me on Friday, and she started showing me the spikes, and I said, okay, well, show me the death rate in Florida. There was 3 people that were, and I don't mean to be disrespectful. There should be no deaths, but again, we're looking at kind of the big picture here, and it was thousands and thousands of infections, and there was 3 people. I mean, as far as I'm concerned, it just doesn't seem to. It just seems to be like almost like a afterthought. What do you guys think of this?
Did they walk back to the COVID deaths to people? The CDC director said like they already had other issues with them and everything. Something that people were saying in the beginning, and it's just amplifying it.
They died with COVID, not from COVID.
Okay.
The pivot.
Obviously, the news media has to get, they're in the business to get ratings, right? So what is selling? Fear. So, that's all you hear right now. You don't hear anything good or positive with the news. And it's one of the reasons why I don't watch the news or anything. But I mean, if you were judging the stock market by, like new cases and you saw this stuff a year ago, you would have travel stocks get hammered, and they're actually holding up. So I just think the market is so disconnected from the news right now that like it's no longer like a huge thing. You would see like your stay-at-home stocks do very, very well, like your DocuSign, Teladoc, Peloton. I mean, they're just getting hammered. So it's a crazy thing going on in the markets right now. It's a crazy time we're living in. Like I was at the airport yesterday. I mean, there was like 10 people on my flight. It was crazy. Like there was no one there.
Really?
Yeah. Like I'm
Where-
coming back to Houston to Tampa, and like it was the easiest flight ever. Like there was no one on the flight. I went through the airport in like 10 minutes on and back, and I'm like, where is everyone traveling? Like it was weird.
Yeah. So and honestly, if you look at the market really hasn't been. I'm not really seeing like the news impacting. So it's kind of what I'm trying to say is it seems like there's a huge disconnect between COVID and the stock market. But I think the stock market is smart enough to realize that. Basically, what I'm saying is the stock market is not buying into all this crap that we're seeing on the news. As far as I could tell right now, it's just not buying into it at all. And honestly, one of the benefits of this Omicron, I don't know if you want to call it a benefit, if Busse, you could write your question here and we'll answer it live, or we'll respond to you.
We are live.
Yeah, you're live. You're here. We'll read your question, and if you want to reach out to any of us individually, we'll post our email addresses or a way to contact us at the end of this at the end of the broadcast. So what I'm trying to say is it looks like the market is wise to it this time. But one of the things that's really great about this Omicron is the fact that it's so fast. This O variant is so fast moving that it seems like they created like a timeline for when it's supposed to end, and they're talking about March, and now they're moving it back to beginning of February. They think it's going to peak out. They think it's going to peak out much earlier than they initially expected, which tells me that the market may be pricing more of that into its value in anticipation of healthcare getting better and so forth and so forth. But these news forecasts that we're seeing, like clogged hospital, none of the, I'm just not seeing any of that. I'm not seeing any of that around these parts.
Why? Like half of the people I know have had the Omicron in the last 3 weeks, and none of them gone to the hospital. Thank God. I spent like a year and a half barely knowing anyone, thankfully, that had it. And then like in December, pretty much everyone I knew had it or knew somebody that had it or had it in their house. And it's been pretty mild. What I will say, though, what disturbs me is that people in general, and this is a broader secular discussion, this isn't just Omicron at this point, people do not trust information they're receiving from the media or from the government at all on any level at this point, which is a bigger problem for the markets to digest in general. Because you get these guys and they say, you can't do this, you can't do that, you can't do this, you can't go there, you need a passport, you need this, you need that. But then you go and you see restaurants packed. People come down from New York, from Manhattan, where they're terrified, and then they come to Florida and they act a fool. Like they go totally mental.
Like your girl, Jeff, AOC.
Yeah, they go nuts, and they say one thing and then they do another. So, but the distrust for any information, statistically, official news, from doctors, I've never seen it, and that's problematic because, you know, when trust is gone, you start to see institutional failure. And when you have institutional failure, then you get people hoarding gold, you get people not trusting banks, you get people not trusting all the institutions. So for me, the fallout now that I'm paying closer attention to is that institutional distrust that's starting to really spread. And you see it in the supermarkets again, like a lot of stuff not there in the supermarkets. That's because people do not trust the system. They do not trust that in a month they're going to have their basic items that they need to live the life the way they like to live life.
And actually, that's one of the topics that I wanted to go into next. Out of the 11 major sectors, and I'll start with Lance, and we'll move on to Jeff. Lance, where are you seeing strength over the next, let's say, 2 to 4 weeks, over the next short term? Short to it depends what you're saying. If I ask a day trader what I'm expecting in this short term,
right?
It's probably 5 minutes, right? But no, I mean, 2 to 4 weeks. What's your short term prognosis of, let's say, January to beginning of February? What are you seeing for the market, and what's your top sector right now?
Oh man, I bounced back and forth. Like I was just short retailers, and then Monday and Tuesday I got long some retailers. um, you're starting to see some retailers come out with numbers. You had Lululemon. I think you had Abercrombie and Fitch the other day as well, and I think Under Armour should be coming up here, just judging by the implied vol and the options. I finally started to see some decent longer term buying in retailers to start the week, like in Macy's and Kohl's, which is shocking. Going out like to May and Macy's and stuff after they got crushed. I think we talked about TJ Maxx and Ross the other week. They got crushed, and down here I'm starting to like them. Again, nibbling, and I want to disclose I'm a very short-term trader. Most of my trades are days. If I hold a trade a week or two, it's like a miracle. But also too, I like, and I actually got long some KBH Homes, and I think they report, I believe it's today after the close, actually. Today after the close. I mean, I think Jeff was talking about Powell yesterday and inflation. Like, I'll be honest, we're here in Florida. The housing market is just still booming. So I actually like some of the housing stocks here, and
There's
some
no
of the
inventory.
Lowe's
There's
and
no
Home
inventory.
Depot. Yeah, it's very, very low inventory. Like, I keep hearing people, oh, I can't wait for housing to come down. I can't wait for housing to come down, and it's really not. And some of the housing stocks are off the highs. So, it's something that you can buy.
They're buying houses with cash or like at least 50% down payment, which makes it an entirely different housing market than 2007 when we got the great financial crisis, where everybody was putting 2% down and, and interest only loans and all kinds of shenanigans, getting themselves into trouble. These are strong hands holding real estate. So for me, it's someone asked on this thing. So I'll read one of the questions. Sorry to interject, but it's an interesting discussion. They were like, all right, Jeff and Lam, I'm hearing you guys, inflation, gold, crypto. And I'm like, gold may be my least favorite inflation. I like crypto. I like real estate. Energy is going to go much higher, in my opinion. These guys keep every month saying, this should be, and the media is in bed with the president, right? The media is in love with Biden. They give him a free pass on everything. And every month they come out and they say, this is the last month where you see a huge inflation number. We should start to abate. Well, I've been hearing that shit for 7 months right now. And we keep making new records, okay? So my personal basis is that it's going to get much crazier. And they're going to say, do you remember when they said in January that this was the peak? Well, it wasn't the peak, right? So you have to, these things they don't clean up tidily, right? It's like a bad portfolio.
Right. Very, very, very good point. And what I'll say to that is the sectors that I'm looking at I'm looking at REITs. I'm looking at residential real estate REITs, because I think with higher rates, people are starting, with the real estate prices going higher, so much higher. A lot of people are moving from housing market, from the houses into the apartments and into apartment investments. Rent is going up right now. Right. Interest rates going up. So residential REITs, energy, a lot of energy. Basic materials, I still like basic materials very, very much. Commodities, obviously, due to inflationary pressure. My big question, and probably this is the $1 million or probably the $1 trillion question, is what do you guys think about tech?
Oh, goodness. That's a rough one, because there's good tech and then there's a lot of bad tech. I think the good tech, and when I say good tech, I really mean kind of the old tech, your NVIDIA, AMDs, your Apple, Facebook. I think they'll hold up well. Like those names you can always rotate into, right? Your internet software names, they're still just very nasty out there. I can't personally go and bottom fish them here. If I had to be in tech, I would be in, some of the semis like Marvel, AMD. Intel had a nice bid the other day. But the NASDAQ, it seems like every pop is just getting faded here.
Yeah. Yeah. I personally believe that we're still going to see upside in tech, especially chip stocks, because there's just this supply chain doesn't seem to want to go away. But I think some tech is going to there's going to be more of a value look at tech, I think, over the next couple of years. Also, there's a very huge correlation over 30, 40, 50, 60 years between consumer discretionary and bonds. And if bonds do start going down, which they will with interest rates going higher because there's an inverse relationship between both, we're going to see a natural decline in consumer discretionary stocks. So I think that's going to happen, but I think it's going to be selective. I still think stocks like NVIDIA, AMD, real solid gainers are going to do well, but I think we're going to see a revaluation of the consumer discretionary and software sector. I think stocks like Adobe, Microsoft are going to start getting a slightly lower valuation. With that said, I don't think it's going to be as extreme as a lot of people on Wall Street think. And I think those stocks and the growth and momentum stocks are still going to do fairly well over the near term. That's my 5 cents there. What do you think, Jeff?
I say you got to be careful in tech. You got to look at I think you guys both hit the nail on the head. If you're in a growth tech stock that has no earnings and has triple digit PE, you're going to find yourself behind the woodshed. If you're in a larger, more established NVIDIA, AMD, you can play those from the long side, but don't chase them after they've rallied back like the last couple of days. Buy them when everybody's throwing them out the window, and buy them for long-term holding. Money's going to flow back into those names. Those guys are bona fide winners. They're world beaters, and that's not going to change. What's going to change is there's going to be multiple compression for equity in general. And so I heard Paul Tudor Jones, who I hold in the highest regard. He's one of the real OGs of hedge funds. They're not all like that. He was on CNBC yesterday saying, you got a NASDAQ trading at a 38 PE on average in technology, when historically it's around 26. And I could see that coming down to 26. You got to be careful. So that's my opinion. There's lower hanging fruit. Be long financials, be long energy. We've been saying these things. We've been talking about these things for months. We've been right. Like, why are you going to stick your neck out and try to bottom pick PayPal? Or like a lot of these companies are priced to perfection. You can trade those things, but we're talking from an investment standpoint. Understand how they're trending intermediately. I think it's really important.
And that's key. That's key too, Jeff, what you mentioned. Everyone wants to go and bottom fish tech because, if you scroll down the television, all you see is, Apple, PayPal, Square, Twitter, the very popular stocks. So when we go to the screens in the morning, we think we have to trade those stocks. Those stocks are like roller coasters, up, down. Someone mentioned dead cat bounce there. Yeah. You're basically having to be, time the market perfectly. And then a lot of times you see that AMD or NVIDIA is up 2-3 days in a row. So you think, oh man, now's the time to buy it safe. And then it just reverses on you. And next thing you know, NVIDIA is down 20 points. And you're like, what do I do with these options I paid $7 for? Now they're marking 50 cents. If you stick with some of the trending markets, which commodities are like marathon runners, right? They're slow and steady. That one's the race. You look at some of the copper names, Freeport Tech. You look at some of the natty gas names, AR, RRC. These stocks, they tend to trend well to where you don't have to necessarily be right at the right time. You can, just ride the wagon. You fall off, they go down a day or two. You can dip by with some pretty much confidence that, the trend is going to be higher because they're commodities, and they especially during this period, they trend better, is what I'm trying to say.
Yeah, the commodities. Well, commodities are based on the actual commodities. So commodities are a trending asset, where stocks are a counter trending asset. So you're absolutely right. You're going to get a better long-term trend. If you guys want to see the best trending market, take a look at the Japanese yen over the last 30 years. That is by far that is not an asset that you want to use a fading system. That wouldn't a reversion to the mean system of the Japanese yen is not the way you want to go, or at least historically speaking.
That's because their government is constantly diluting it, selling. I mean, like that's a byproduct of financial alchemy. That's what those
100%.
Yeah.
100%. What are your thoughts, guys, on Apple? These are good. There's two good questions, and then I want to have Jeff take the floor and talk about what you've been wanting to talk about here.
Okay.
But, thoughts on Apple here?
Lance, go.
Go ahead.
Oh, so here's a dart that I'm going to throw and say higher or lower. No, just kidding. Apple leads, right? Apple's the leader. You look at the Qs, you look at Apple, you pretty much that correlation is spot on. What I'm a little scared of, and Apple reports end of the month, the 27th of January. What I'm a little scared of is that they run Apple, especially after Jay Powell yesterday, they run Apple up to new highs slowly ahead of earnings. And then everyone wants to hop on board, and then it pulls back on earnings because it wasn't good enough. Personally, I like following Apple throughout the day on a 15 minute chart, just because usually gives some pretty good market direction for the Qs. But I can't touch it here. It's been trading sideways since mid-December. I really can't. You do start having, I think Netflix kicking off earnings in a couple of weeks, and then you get into the big names. I wish I could tell you, but I would literally just be guessing on direction. So I have no position on it. Maybe 60-40, they run it up into earnings, but
I'm long Apple right now, and I'm holding it for that reason. I think they're going to start running it up ahead of. I wouldn't hold it into earnings, but I think they're going to start running it up ahead of earnings and hold that carrot higher. Because as you guys know, Apple they love to play the underestimate the number and throw. That's they practically, them and Bill Gates practically invented that. But what about cruise ships, guys? And you could take whatever order you want. You want to start? Let's start with Jeff on this one. Cruise ships, Jeff. I know you have very, very strong opinions.
I'm the wrong guy to talk about.
Now, here's the interesting thing. Jeff and myself have had exactly the same opinion on cruise ships for the last 2.5 years, and it hasn't changed one bit. Correct me if I'm wrong, Jeff.
I mean, listen, they've taken. I'm of the camp that you have 20% of the population that is so psychologically damaged on living any sort of normal life. And I think that there's a lot of, if you took like a Venn diagram, there's a lot of overlap between that 20% and people that cruise, because cruisers tend to be older people. No offense to any older people watching this, but I think that's an industry that's taken like a gut punch that they're not really going to recover from. And this Omni, even though it's like, it could be it's Omni. I call it Omni because it sounds cool. But the Omni is it's the end of the pandemic, possibly, but there's also a completely different did you guys see that it's not even a variant that's derived from COVID-19? It's like its own new branch of COVID-19. And so when is the next shoe going to drop? Are you going to want to be sitting somewhere on some giant aluminum floating vessel off the coast of the Cayman Islands when news comes out that there's like Godzilla Part 50 of the variant, and people start vomiting all over the place in the hallways, and then you're sitting there outside of Port of Miami for 2 months waiting to get back into the United States? I don't want to be that person. So I think that there's been a real shift of the mentality of that business. I don't think they get back 2019 numbers for a lot. Like, you want to talk about peak? I think peak cruising has occurred. So
it's a dying business.
Yeah, I don't want to be long a business that's seen its best days behind it. I'd rather be long a business that the future is brighter.
And I think they really. I agree with everything you're saying, and I just want to add one more thing that it seems like they really shot themselves in the foot by not incorporating in the USA, because they can't even get aid. Yeah. That airliners, which I think is like the biggest. The biggest.
Well, airlines are necessary for the economy. Right, like people have to travel for business. The airlines
right.
are considered a utility to a degree. Cruise ships
Yeah.
are not.
Yeah, and I agree. I think it's a dying breed. I think it's a dying business industry. I don't think it's a model that's going to sustain itself over the next 50, 60 years.
You can
In my
trade it. Are we talking like to invest long term? There's just better stuff to do.
Yeah, for trade or to invest long term, I think there's a lot.
Give me
I think
Apple. Give me Apple all day.
right.
Over Carnival.
And here's the thing, folks, and this never ceases to amaze me. There's so many different stocks out there. If you are not sure that you're investing in the best company, just don't do it, because there's usually a better company. I always ask somebody, like, why would you invest in this stock over, say, Crocs or Apple or other companies that are just doing fantastic over time? Why would you invest in a company that's only made 5% a year over the last 20 years instead of a company that's made 100% every year over the last 5 years? And people still do that. Like the cruise ships, for example. Money comes in, look at volume. People are still buying it. So it just blows my mind that you can make such good decisions. And I'm not signaling anyone out here. I'm just saying this out, for the general public. Be wise. Use some kind of a method to gauge your stock, so you always know which ones are strong, weak. Use the 52-week high. Use my CSI scan. Use a method that Jeff or Lance provides. But use something to always know where the strength and where the weakness is coming from. Jeff, why don't you take over the screen and share with us what you've got in mind? Because I'm really excited about seeing it.
Yeah. So this is I gotta get the sharing. My host needs to let me share this. So
Noah is asleep at the wheel. Look at that. He's not letting you share, eh?
he's probably buying Apple calls right now. Let's see. No, still can't share it. While we get that organized, somebody asked an interesting question. If my views of volatility changed, I think this is going to be an uber volatile year, and I don't think the volatility market fully reflects what's happening underneath the hood in the stock market and in individual names. I think we've had a lot of volatility suppression to start this year. And I think that those guys are going to unwind in a big way in the coming weeks, days. I think that people think that the Fed put was put back in by Powell yesterday, but that's not a good thing. That's the part that people haven't wrapped their minds around. The biggest threat to the system right now, to the economy, is the fact that the Fed is dovish. It's not a good thing for stocks. It's not a good thing for the economy. It's contributing to labor shortages. It's contributing to the logistics problem. It's not a good thing that these guys don't act to curb inflation. It might appear to be, but it's not. And I think the market always cuts through the bullshit, and we'll get to that theory here shortly. That's my view.
Your co-host, Jeff, you should be able to share right now.
All right, let's go. No, I cannot. Oh, yes, I can. Bang, 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 bango. So this is such a simple, it's such a basic but beautiful, effective little trading strategy that I have that follows the monthly money flows. It follows what's happening in the beginning of the month. And even though the market's been pretty crappy to start 2022, the stocks that I have found in this thing have done pretty well. So to wrap up today's sessions, I want to share with you an incredible trade opportunity. Every month, I look to see where the big money is pouring into. I'm staring at the first 2 trading days of the month in particular. And once I isolate where there's a flood and volume moving in, we pound. So this was one example. We had Workhorse up 212%, Marathon Oil was up 86%. And these are real life, these are all recommendations, prior recommendations. And so look at these kind of moves that you can see within a month, which is pretty shocking when you tell people that. The bottom line is stocks don't move all year long. They do the lion's share of their movement in a short period of time. So if you look at a stock and you're like, wow, that stock was up 80% this year, there's a good chance it did most of that move in 4 or 5 weeks. So this system is predicated on being there when the sun is out and when institutions are accumulating that stock in a way that's moving that stock price up, all right? So the goal is to target the stocks that institutions should be sending higher all month long, because institutions also are copycats. They're not, people in our industry are notorious copycats. Nobody likes to do their own homework. We all like to cheat off of each other. We all want the cliff notes. We all want to piggyback each other's ideas. It's the nature of finance. So a couple of people start putting on this position, and then everybody piggybacks it through the month. it creates this multiplier effect that goes on and on. So I call this setup the monthly money flows. And here's some of my recent monthly money flow winners: 46% on Ford, 68% on Merck. This was an unbelievable trade. 423% on Cabot Oil. Remember when Natty was flying, Lance? We were talking about this a lot. We were there with that. And it was like, I wasn't like a big disciple or understanding exactly why Natty should be moving other than the inflationary stuff. But this simple system allowed me to see institutions piling into this stock. And so with this super easy way to trade, we put it on. So my newest pick this month, with the market being weak, with the market being soft, with a lot of stocks down double digits, my pick this month is rallying. But the good news is there's still a lot of meat left on the bone. The month's still got 2/3 of the month to go. And so, yeah, jump in, guys. The water's good. I believe they took the words right out of my mouth in the slide. These guys know how I talk. There's a lot of meat left on that bone. And it keeps going throughout the month, because these guys will start to realize that I want to be in the stock that everybody else is in, and that pushes the stock up. I want out of whatever stocks are getting smashed, like the Cathie Wood stocks, and I want in this stock. So they're all copycats. They all play the same game, and this is basically a legal way to front run what my indicators tell me to be true that institutional Wall Streets are doing. So I send you entry and exit details, as well as a new pick every single month on the third trading day. And this is the part that makes me want to pass out, because I'm pricing myself like Dollar General, and I feel like I'm Louis Vuitton. But $5, guys, you can click on the link in the chat, and $5 a month will get you a really, really high quality institutional style trading strategy that's super simple to do. So look in the chat, see the link. If you're not in there already, check it out. And there's a lot of meat left in the bone for this month, but for $5, I mean,
$5?
You're not going to get the same value for a $5 footlong. I can tell you that.
$5?
$5, yeah.
I can't believe you're doing this for $5, folks. Don't even think. It's too cheap to think. Just buy. Just buy. Right? It's too cheap to think. There's nothing to think about here, really.
It's slightly embarrassing, but at the same point in time,
nothing's really $5 anymore.
It really does expose. It teaches at the most basic level systematic trading, how to be systematic in your approach to the markets, rather than just I read a cool article and I want to buy this stock. This is the opposite of that. This is being like Inspector Clouseau or Sherlock.
I like
Holmes.
that. I like
Sherlock
Inspector
Holmes,
Clouseau.
I see some clues that this stock is being acquired and accumulated. And so you're approaching the market like a detective rather than like a journalist.
And I'm going to tell you guys, folks, Jeff has been doing this for almost 30 years. He's been doing this for a very, very long time. If you can get, for $5, if you can just glimpse into his head and just get one tip, it would be worth more than $5.
Well, that's what I was going to say. At the most basic level, it's an introduction to how I think, to how I operate, to how I like to have a strategy that takes into account the most valuable thing that we all have, the most valuable commodity in the history of the world, which is time.
Yeah.
You got to learn how to use time.
Right. And whether and knowing and having the foresight to know that what you're doing is relevant. Because look, you can go on a financial site, type in financial, how to trade stocks, and it'll keep you busy on Google for the next 50 years. It gets some direction, get some guidance, get someone from actually somebody who did it on an institutional level. Jeff, is this a one-time thing, or is there an upgrade cost or renewal cost? Do you have any idea? Because they don't tell me anything when we have these offers.
I think that this is about as good a deal as they're going to offer on this thing. I don't know how long they're going to run it for like this, but I had an existential crisis when we priced it in the first place, and I'm
on the page now.
Oh, okay.
Yeah, I went to the order form.
Lance is buying it before we raise the price, Jeff.
Well, I want it, to be honest. Well, A, for the pick, but B, I see Jeff includes his videos, and Jeff's a straight shooter, so you're not going to hear him milking the cow on, oh, this is a great stock as it hits 52-week highs, and you're late to the party. he'll shoot from the hip there. So just the videos alone too.
No, yeah, they even asked me today. They were like, "Guys, should we talk about this? Because the trade came out last week. So I was like, what do you think about the rest of the month?" And I'm like, wow, this stock can go a lot higher. So yeah, let's roll it. Because people that come in today, I do truly believe that this stock can go a lot higher still. So
yeah, and again,
the beauty is next month you'll get it on the third trading day. Sorry to interrupt.
Right. And no, I was just going to say, you're going to get 12 monthly money flows. It's $5 per month. We're getting all the details. And again, you can call us and cancel it. The bottom line is, if you're not happy, you can cancel. We're not going to nickel and dime you. That's not the goal of this exercise. The goal of this exercise is you're welcome, Germano. The goal of this exercise is to expose you guys to the wisdom of Jeff Zananeri and have you guys follow him so that you can become a better trader by following somebody who actually knows what they're doing. That's what this is. This is the goal. We're not going to, Jeff, Lance, and I are not going to make money from this deal. I'm going to promise you that right now. This is for you guys to benefit. We are doing this 100% for you. Take advantage of this offer. It's a no-brainer. I see Noah here in the corner sneaking out his credit card, trying to get in on it. I see what's going on in this office. So seriously, guys, Jeff's insight is worth a lot more than that. As Germano says, your insights are for the most precious things ever.
You know what's amazing is like this, that when you get this right, you're going to outperform. You're going to outperform the market. Typically, you're going to be avoiding the sectors that people are getting smashed in because it's identifying the flows. So it is what it is.
Yeah. So folks, jump on this opportunity. And again, Lance, I want to really thank you for. I know your time is valuable. I want to thank you for being here. If you want to post an email address where people can get a hold of you, please do. If you guys want to get a hold of Jeff, Jeff will post his email here for you. And I will actually post my email here for everybody right now. So if you guys want to get a hold of me, maybe I didn't answer a question you had. Maybe there was something that I missed because I was so excited about this offer that's so amazing. You can reach me at support@marketgeeks.com. You could reach Jeff at joyofthetrade.com. Thank you, Jeff. And Lance, please give your, a good email. Thank you, Lance. I appreciate you doing that as well. And folks, we're not trying to do this for 3 hours. We just wanted to give you guys a nice midweek roundtable so you guys know exactly what to expect. If you have any follow-up questions, please, please, please feel free to reach out to us. And you'll be seeing a lot more of us together this year. I was telling Lance and Jeff that we all live in Florida. We all work together. We got to do more. We got to do more things together because each of us has a very unique opinion, and I think everybody here would benefit from that. As a matter of fact, I know everybody would benefit from that. And the best way to benefit. Sorry, Jeff. Go ahead.
I said it's fun, and I benefit from it. Here's the thing. Just because you've been a trader forever and you've made a bunch of money doesn't mean you have the monopoly on good ideas. And so I think once you start to become closed-minded and rigid in your ways is when you start to die, kind of. So I personally, as a practice, always try to learn new things from other people that are passionate about a specific topic. And these two guys on this panel are such junkies on the markets and trading that I always walk away with something I didn't think about, that I didn't know about, that improves my game and improves my insight and maybe gives me a different perspective. So at the minimum, we want to give more of that, in my opinion, to you guys rather than just to, blast out some BS.
Absolutely. So folks, take care of yourselves. Please feel free to reach out to either Lance, Jeff, or myself anytime you guys want. Our doors are always open. I had a wonderful midweek roundtable. We will record this and we will put this in our members area. So you guys.
Did you see what this Amy Lynn Viegas wrote? I absolutely agree on his program. I got back 20 times more my fee in my first trade.
I love that. I love that. Love that. Love that. That makes me feel great. That's great. And Jeff says, South Cal Jeff's the same for me. Made more money than the fee, even though I was dumb and got out early. There you go. Hey. It's foolproof. There you go. Thanks, Jeff. Thanks, Lance. Cheers, guys. I'll see you guys later. And feel free to pop into my VIP room anytime, and I'll pop into yours, Lance, sometimes as well.
Awesome. Sounds good. Talk to you guys maybe next week or so. We'll be back.
That's right. That's right. We'll be here next week.
Look at that.
I'm gonna put a suit on. I'm gonna put the tux on next week. I'm gonna get Like
There you go.
maybe
Gonna
a
have the,
carnation, like I'm getting married or something too.
we'll have the James Bond look, and Lance will have his hat on. Bye,
Not my
guys.
hair,
Take
no.
care. Have a great day. Bye, all.
Yes. Take it easy, boys.